What's up, everyone? It's Scotty with MoneyVest. So we've got a big week on our hands next week. Not only are we packed with earnings, but we've also got inflation data that's coming out. And yes, it's going to be Fed's preferred measure of inflation, which is the PCE, that's the personal consumption expenditure, and the core PCE, which is obviously excluding for food and energy. Two really important metrics for the Fed. Hope you guys enjoyed this video. I'm going to break down exactly what's coming out and when. I've already done a technical analysis on the markets in one of my previous videos, so make sure that you do check that out if you haven't already, because there's a lot of valuable insight and technicals to watch. And I go over key levels, literally like we talk about a spreadsheet in that video, and what stock is trading in what pattern, uptrend, downtrend, or horizontal pattern. And key levels to watch in that video is already broken down. So I would highly recommend that you watch that video if you haven't already. As always, make sure that you drop a like, subscribe to the channel. If you haven't already, I would really appreciate it. And links to our Discord and Patreon is going to be down below. 16% annual discount before the end of this month. And if you join our community before the end of this year, you'll be one of the first people to access our MoneyVest Pro platform, okay? It's coming soon. You can literally just go right now to moneyvest.com. That's the URL. You can go get early access if you want. It's going to give you access to our community, our Discord, and our platform eventually when it does get live with the beta launch in February of 2024. So you'll have access to a ton of data and features, from fundamental analysis to MoneyVest metrics to volatility to macros, inflation data, interest rates. Everything's going to be included. And we're full swing. We're working on this tirelessly every single day. I just literally had 9 Zoom calls today on this. So again, link's going to be down below. We'd love to have you on board. So first things first, let's talk about the earnings. All right, so calendar's packed. It is full swing. Earnings season's getting started. Last week we heard from Tesla. Miss on EPS, miss on revenue, dropped over 15% last week. Netflix, on the other hand, came out with strong beats, with very strong additions. So tech is kind of getting started on a sort of like a mixed footing. But this week, upcoming week, we've got lots of companies, like including Microsoft and, of course, Google. We've got Meta reporting. We've got Amazon also reporting next week on Thursday after the bell. So those right there are going to be some of the main ones to really be watching for. I can't even draw a rectangle. But we've got Coca-Cola, of course. We got Verizon. We got General Electric, RTX, so Raytheon. We've had a trade idea on both Coca-Cola, Raytheon, and Colgate, right, last week. And they all reported really well. Or they are expected to report really well. They actually performed really well last week. We've got Spotify, we got Nextera Energy, and we've got GM reporting on Tuesday before the bell. Microsoft Alphabet, as I mentioned earlier, Snapchat, we got Visa, Teladoc, Texas Instruments, and then of course we got Boeing, T-Mobile, ADP is reporting, General Dynamics, IBM, ServiceNow, Align, Clack Corporation, that's actually a pretty good company. We got Meta Platforms, of course. We got Hershey's, Altria, Southwest, Northrop Grumman, Valero, Merck, and then we've got Chipotle, Dexcom, Intel, Ford, Enphase. Enphase is going to be actually quite an interesting one. SolarEdge reported their numbers, and it was quite disappointing. Enphase dropped a little bit over, I think, 12-13% after the numbers came out. So Bitcoin, by the way, crossing over 30,000. This alert just went off, but Enphase here dropping over 14% on Friday. And for the week, it is down a little bit over 20% at the moment, right? So we have Chevron, of course, AbbVie, ExxonMobil, so lots of energy companies also reporting their numbers. So it's packed with a lot of S&P 500, Dow Jones, and NASDAQ companies reporting next week. Now, in terms of expectations for interest rates, this has changed a little bit. So what you'll notice is now pretty much a done deal that the Federal Reserve is not going to be raising rates anymore. They're going to keep them steady, and then they're going to pause with almost 100% certainty, 99.9%, that rates are going to stay put where they are. They're going to stay where they are until at least May of next year, and then we're going to start seeing cuts in June, and 3 cuts are going to get priced in, right? So one here, and then one here. We're going to settle in at around 4.5 to 4.75%. That's going to eventually be the terminal rate, is what the market's pricing in. Now, we know that the economy's been super strong, right? Yields continue to move higher. Now, maybe there's a speculation that the 10-year yield, the treasury market, is doing part of the work from the Fed's side, because as the 10-year treasuries and the 20, the 30-year, pretty much the entire yield curve continues to move higher, right? Because treasury rates are going higher. That's putting more and more pressure on the overall economy, right? That's tightening the economy from a credit standpoint, and that's doing the Fed's job. That's maybe perhaps one of the reasons why the markets are now more optimistic for a pause and then eventually a rate cut from like originally there were 2 rate cuts priced in. Now there's 3 rate cuts priced in from the market. So again, eventually we'll find out what ends up happening. But this right here is the economic calendar, okay? So we do have the 2-year note auction that's taking place on Tuesday, October 24th at 1 p.m. Eastern. So that's going to be that. Manufacturing numbers come out, so that's going to be the manager's index. Very, very important, right? So 49.8, anything under 50 is actually not great and does represent, the economy is contracting a little bit. And we have been under 50, around 50 for quite some time, which again does suggest that the recession probabilities are increasing. But at the same time, you've got a very strong labor market, you've got very strong economic growth. So there's mixed signals from a recession standpoint. We got building permits, new home sales, crude oil inventory, new home sales again expected to, basically come in at 679,000. Now, this number has been going down as more and more homes are falling out of contract because of higher borrowing costs, and not to mention prices. Home prices are still pretty elevated, even though they have been slowing down. They're still up over 30% in the last couple of years, and mortgage rates sitting at well over 7 to 8%. So that's obviously putting a huge pressure, huge impact on borrowers and buyers as well. And we've got Fed Chair speaking again, and that's going to be on Wednesday, October 25th at 4:30 p.m. So that's pretty much after the markets close. And we'll see if the markets react after hours to what Chairman Jerome Powell has to say or not. GDP numbers and retail inventories and durable good orders come out on Thursday, October 26th, all at 8:30 a.m. Eastern. So that's going to be a market-moving event, probably very, very important for the market. Fed Waller speaks. We got pending home sales, and we got the 7-year note auction as well. And this is going to be the most important day for the market next week, where we've got core inflation coming out. So this right here is going to be incredibly important, right? So we got core PCE and actual PCE numbers coming out. The expectations are going to be 0.3% with month over month, again, 0.3%, and personal spending at 0.3% as well. So that's going to be the estimate. And of course, the Michigan consumer sentiment is also going to be due at 1 p.m. Eastern. That's going to be on Friday, October 27th. The estimates are at around 63 at the moment. So that's where we are with the entire economic and earnings calendar. I've already gone over the S&P 500 and the NASDAQ. Unfortunately, we are very much in a downtrend. So you can see the S&P 500 right now still making lower highs and lower lows. And we are still very much in this downtrending channel in the moment. And of course, going into next week, the support level is going to stay put at 4175 to 4200, very much in line with this previous resistance level they've talked about in our videos. And of course, the support level, which was previously acting as a resistance for the S&P, and resistance all the way up to 4450 to as much as 4400. And of course, we got the NASDAQ here still trading inside this downtrending channel of lower highs and lower lows. And not to mention, we've also started to break down below that 200 simple moving average. So unfortunately, the NASDAQ here, the S&P 500 already breaking down below the 200 SMA. And this right here is going to be that next support for the NASDAQ at 12,700 for the NASDAQ as well. So hope you guys enjoyed this video and a complete update on the markets and what's coming up. Lots of earnings and economic data coming out. Don't forget, we've got the very own moneyvest.com platform launching in 2024. So get access to that with a link down below. And as always, happy investing, and I'll see you all in the next video.